Welcome everyone to the Vested Interest channel. This is Shane back for a stock pick of the day video. First one in December, last month of the year. Can't believe December is already here. It's going to go fast, folks. We are going to miss some time for Christmas and New Year's. So get your hats on, get ready for Christmas because the New Year's is just around the corner. Today we're going to take a look at Hershey. This is out of the consumer staple sector. Now, this is the vested interest stock screener. Keep in mind, it is just an initial screener. It is how I look at companies to see if I'm interested in doing more of a deep dive into the financials. It must meet 5 of 8 to make it onto my watch list for me to be interested in doing more of a deep dive into their financials, their balance sheet, their income statement, and then doing a discounted cash flow analysis on those companies that do make it through that screener, and possibly adding them in the future if they meet some other criteria beyond the screener here. So if it does meet the screener, that does not mean I am buying, and you should not be buying any stocks that I am buying, even if I am, or anyone else for that matter. Make sure you're investing based on your investing criteria, your timeline to retirement, or whenever you want to use your portfolio. Maybe you're planning on using your portfolio before retirement. Just don't blindly be following anyone else's advice, especially people on YouTube that you do not know. All right, back to the Hershey Company. You can check them out on their homepage, www.thehersheycompany.com. That's www.thehersheycompany.com. That is their homepage where I pull this information from. This is one we've done in the past, but it's been a while, so I thought we'd take a look at them again. A History of Goodness, Milton Hershey's love for confection, and that's just a fancy way to say sugary sweets. Started at a young age and flourished when he established the Hershey Chocolate Company in 1894. That's right, they've been around since the 1800s. By 1900, we sold our very first candy bar. Today, our portfolio of brands has expanded beyond the beloved and iconic Hershey's Milk Chocolate Bar, and you can see some of their brands over here to the right. Probably my favorite is Reese's Pieces. You see the Reese's there, Hershey's, obviously. There's Twizzlers, there's a Heath Bar, Pirate's Booty. I think that's more, that's not really candy. I think that's more along the lines of popcorn there. Hershey Kisses. We can read through the rest of these. Kit Kat, Dots Pretzlers, York Peppermint Patties is another one. There's Twizzlers again, Skinny Pop. That's very similar to Pirate's Booty, Milk Duds, Good and Plenty. I actually do not like those at all. There's all of these different brands that are underneath their umbrella right now. But if you like sweets, you Rolos, there's another good one. Whoppers. If you like sweets, you are probably eating some of their candy, whether you realize they are from Hershey or not. So go ahead and check them out on their homepage if you want to know more about them or want to know more about their brands, when they brought them into. You can kind of go through their history and see when they brought them online, when they started making the different sweets that are out there. Now, the reason we were taking a look at them, down 1.49% on the day. We are talking about the Hershey Company, ticker HSY, again out of the consumer staples sector. Closed out the day at $185.28. Looks like they're down a little bit more in the after hours. After hours goes towards 8 o'clock. 52-week range as low as $140.13, as high as $208.03. Now, they are not quite within 15% of a 52-week low. They need to drop under 160 and some change, 161 I think it might have been, and some change there. You can do the math. Take $140.13, multiply by 1.15. That will give you 15% of a 52-week low, and anything under that will put them in that range. Market cap of $37.572 billion. So a relatively large size company, beta of 0.19. So they are much less volatile than the overall market, one being the market. PE, price earnings ratio, $27.65. Seems a bit elevated for a company like this. I don't know how fast they are growing earnings, but they would need to be growing fast earnings to justify such a price, or such a high price to earnings ratio. Earnings per share, EPS, $6.70 per share. Earnings date was October 30th. We are past that, but you can go check that out if you're interested in knowing what was going on with their earnings a couple months ago, or a little over a month ago now. Forward dividend is $5.48. They are quarterly payers, so divide by 4, though we will see that here towards the end of the video, what they pay per share. Dividend yield currently at 2.91%. Ex-dividend date, November 17th, so we are past that. Looks like they're going to pay out on December 15th. So you won't get this December 15th payout if you did not hold shares before the 11/17 ex-dividend date. If you buy them now, you're not getting that payout on the 15th. You'll get the next one, but you'll have to wait several months after the 15th payout. 1-year target estimate, at least according to Yahoo Finance, $189.14. So they do see some slight upside over the next year, but not a whole lot, and that would not put them back to their 52-week high there. Now, jumping over to the right, I like to look at dividend yield theory to see if a company is potentially undervalued. It's a quick check. It's not the end-all, be-all. It's not a discounted cash flow analysis or one of the other metrics that you can look at to see if a company is undervalued, but it is one I like. It's pretty quick. To do it, you take their 5-year dividend yield average, 2.26%. You compare it to their current 2.91%, or over here where it says forward annual dividend 2.91%. Since it is higher than their 5-year average, that speaks to potential undervaluation, at least according to dividend yield theory. Now, their payout ratio is above the 75% or lower that I like at 81.91%. That means it's pretty elevated. That does not leave them a whole lot of free cash flow left to pay down debt, make acquisitions, reinvest back into the company, buy back shares if they want, hold some of that on the balance sheet as cash or cash equivalents, pay a dividend, and most importantly, raise that dividend, which is what we want companies to see. Above 75%, and whatever your payout ratio, maybe it's 60, 65, 50, whatever it is, I'm assuming it would be higher than that as well, unless you really like high payout ratios, which again, doesn't leave a whole lot of free cash flow left over for other things. Speaking of free cash flow, going back here to December 2021, you can see $1.5 billion in free cash flow, 2022 up to 1.8. Now down in 2023, 1.5 again. 2024 back up to 1.9. Trailing 12 months, they don't have it listed yet, which is alarming. They should have something for free cash flow. I'm sorry, 1.7. I jumped up to repurchase shares. So 1.7 in free cash flow over the trailing 12 months. They do have it listed right there, which is down from 2024, but we are just starting just starting December's 2025 here. So we do have a bit left to go, just about a month left here. Now, looking at repurchase of shares, 2021, 457 million pulled out of the market. 2022 down slightly to 388 million. 2023 down again to 264 million. So as their free cash flow decreased, they decreased their repurchase of shares, which makes sense. 2024 down or back up to 494 million. Trailing 12 months, there we see a zero. Repurchase of capital shares is not listed. So a bit up and down on the free cash flow, and same thing with repurchase of capital shares. We'll have to see if they are actually pulling more shares out of the market than they are issuing. We'll see that towards the end of the video. But jumping over to stockanalysis.com, they do have 17 analysts that have taken a look at this. They call it a consensus hold. Low estimate of $134, not currently there yet, so it needs to drop 27.77% more to hit that low estimate. Average estimate of $179.41, not there yet either. Needs to drop another 3.3% to get down to their average estimate, which is not too far off of what we saw with Yahoo Finance in the 189 range. And a high estimate of $222 would be the only way you're making some capital gains on this one, and that would be a potential 19.66% increase from where it currently sits. So it might be one to watch for more of a downturn. Doesn't look like they're seeing quite fair value, even though dividend yield theory says they're potentially undervalued right now. Now, some of the statistics I like to look at as part of the initial screener: return on capital employed and earnings per share growth forecasted over the next 5 years. For return on capital employed, I like above 10%. They're at 18.89%, so above the 10% there that I'm looking for. Now, earnings per share growth is another story. I like above 5% here. They're at negative 1.84%. I do not like to see negatives, and I definitely don't like to see below 5% and negative. That is not good. Revenue growth is forecasted at 3.38%, so at least they see some revenue growth. That is typically more part of a deep dive that I do when I'm looking at their revenue and other metrics in their balance sheet and income statement. Now, jumping over to their dividend history, quarterly payers we mentioned, payout ratio elevated above the 75% that I like at 81.9%. Dividend growth, they're saying non-existent. We don't like that. I want to see a growing dividend, even if it's slow growth. At least 2%, 3% would be better, and above that would be even better. Growth to years 15%. Buyback yield is positive, so they are pulling more shares out of the market, 0.41%. Shareholder yield is positive at 3.37%, which is what we want to see. They do pay out like most companies on the March, June, September, December timeframe. Going back in time here to May 18, 2023, they were paying $1.03, fractions of a penny here. Raised that up August 17th, 2023 to $1.19 and some fractions of a penny here. Raised it up again February 2024 to $1.37, and that is where they remain today at $1.37, and that will be their payout in December 15th. So they have paused the dividend as of February 2024, so going on the second year with no dividend growth here. Even though this says 15 years of dividend growth, I would disagree with that and say they have not raised that dividend for 2 years now. All right, understand the business. Yes, we'll give them a check there. They are a candy company, right? You've probably eaten some of their candy bars or sweets, and whether you realize it or not, they're Hershey's. They have a pretty big brand umbrella. Growing free cash flow, no. They're a bit up and down. Growing dividend, nope. They paused it February 2024. Dividend payout ratio is above 75%, so no check there. Dividend yield theory says they are potentially undervalued, so we'll give them a check there. They are not within 15% of a 52-week low currently, so no check there. Return on capital employed was above 10%, so they'll get that check. Earnings per share growth was not above 5%, so no check there. They're looking at 3 out of 8. They do not make it onto my watch list. This is not one currently I would be interested in doing more of a deep dive. This is as far as I will go with Hershey, at least for right now. Maybe if the numbers or maybe the overall price per share drops a little lower and they get within that 15% of a 52-week low, and something else happens, their dividend payout ratio, if they were to bring that down, they'd have to do some things here, start growing that dividend again, for me to be interested in more of a deep dive into the Hershey Company. Let me know what you think of this one. Is it one in your portfolio where you may be part of the reason it's on a downturn selling today, or are you buying the dip on this one? Let me know. I would love to hear from you in the comment section below. And as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like Hershey you'd like me to cover in the Stock Pick of the Day series, drop it in the comment section. I'll work it into the rotation on a day it pulls back. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great first week of December. Again, it's going to go by fast. We're going to miss about a week for Christmas and New Year's. So get ready. 2026 is just around the corner. We'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investment journey for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and selection criteria, or seek the advice of counsel, a certified financial advisor.